for joining us for the Business Breakfast Talk Show, where we serve you your most important meal of the day.
Good morning, y'all. That's right. We are serving success strategies and system side dishes each Saturday here on Synergy Radio.
And we are your Business Breakfast hosts. I am Tiffany A. Washington.
And I am Joy M. Hutton.
And we're so excited to kick off the show this morning with one of our favorite guests, Miss Sinitra.
Good morning. Good morning.
Good morning. How are you doing this morning?
I'm great.
Good.
Yes, so for our listeners who missed her last year, Sinitra is the Vice President of First Citizens Bank, and she is an expert in business banking and commercial lending.
That's right. So we're elated to have Sinitra back in the studio, and today we are snatching your financial life and helping you get your financial house in order. So you'll want to take notes, grab your coffee and your croissant, and let's get down to business.
Yes, so we all know that it's tax season, Sinitra.
Yes.
Some people are likely running around, gathering receipts, and scraping all their files together for their tax preparer. What is the best place to start when getting your finances together for the end of the year?
Well, you'll want to start with your sales and purchase invoices and receipts and make sure that they're all properly recorded. All the expenses are accounted for and accrued for the products and services consumed but not yet sold or paid for. Review all outstanding accounts records and customers records and make sure that they're current. Write off any bad debt that you have. Review any outstanding supplier payment list. So your A&R and your account receivables and all that good stuff and accounts payables is really, really important to have in order at this point.
Right.
Yeah.
Ooh, I hope you all have a notepad this morning because you're going to need it with Miss Sinitra Hurd here.
Yeah.
So, you know what? You said something, and I want us to pause for a moment. I heard you talk about writing off bad debt. So, for our audience, let's clarify what some of those bad debts are. When does a debt become bad? So, for those of us who are new in business, this may be something that is our first time hearing it. So, Joy, let's talk about that real quick. I want to reference Cron.com. And Cron.com states that unlike cash sales, credit sales come with the extra burden of collecting debts, maintaining debtors' records, and incurring bad expenses. So you have to track your accounts receivables, like you just said, and notes receivables consistently so you can update your records whenever debtors remit their outstanding payments. Bad and doubtful debts arise when some of your receivables become uncollectible. So we've all had those clients who don't want to pay their outstanding bills.
Right.
So how do we recover that? We want to talk a little bit about those bad debt situations. And one of those is the lapse of credit period. Okay? So each credit sale has a time frame in which it must be paid, just like our credit card bills and any other debt that we might have to pay off. This could be 30, 60, 90, or 120 days, depending on the policies of that company. However, if a debt is not paid after whatever time limit is set, and it still remains to be unpaid 120 days later, it becomes a bad debt. So if it's net 60 and you go to 120, that's a bad debt. And you can use accounts receivables aging report to track your debtors' remittances and promptly identify any of those bad debts.
Right. And so speaking of bad debts, thinking about bankruptcy, for example.
Yeah.
A receivable actually becomes a bad debt the moment your debtor declares bankruptcy. So people or entities declare bankruptcy when their cash inflows are significantly insufficient to cover their outstanding liabilities. So the court process may enable you to recover your debt in the course of liquidation or reorganization. So depending on the type of bankruptcy filed, by your debtor.
So do you see a lot of this, Sinitra, in doing business with small and large businesses?
Absolutely.
Yeah.
I mean, absolutely. There are some ways to prevent debts from going bad. Offering counter offers, things of that nature, or giving them an extended period, to pay now and kind of taking it off the books. It just really depends on how you structure, the bookkeeping. But at the end of the day, we do see a lot of that. It is unfortunately occupational hazard.
Yeah, absolutely. And one of the things that we also want to educate our listeners about is the demise of individually liable debtors. Okay, so what does that mean in layman's terms? Basically, when somebody dies. All right, so
not when somebody dies.
Well, I mean,
we got to talk about it. Though.
Yes, we do have to talk about it. This is because individuals and sole proprietors are personally liable for their debts.
Yes.
And if the funds in a deceased person's estate do not cover the debt, it could remain unpaid. And you may be able to pursue payment from any co-signers, spouses, community property, or others that have legal liability for the deceased person's debt. But if that's not the case, you might have to relegate the receivables from individually liable entities to bad debts when such unfortunate events occur. So that's something to think about if you're a co-signer on somebody else's business as well, or if you hold the liability should someone pass away. Make sure that the debts that they owe are up to snuff.
Right. Because you might be paying.
You might be paying it back.
Like, do not include me as your beneficiary because I'm not paying your bad debt.
I know that's right. So we want to continue this conversation, but we're going to take a quick break. If you have any questions, send them to us here at Synergy Radio Network. You can type your questions in on Facebook, and you can also call us at 832-230-5592. We'll be right back.
Pro Floors, we stock a huge selection of carpet. You can buy it today, and you can get it today. With over 20 years experience, we do it all. Carpet, laminates, tiles, and hardwoods. We carry popular name brands. We have the largest selection at unbeatable prices. We specialize in residential apartment and commercial installs. Plus, when you get it today, you can have it installed tomorrow. Get the best floors for less and get it today. Hill Pro Floors on Greenbrier in Stratford.
And search Synergy Radio Network. Stay connected.
And we are back. Welcome back to the Business Breakfast Talk Show. If you're just joining us, Sinitra Hurd, Vice President of First Citizens Bank, is in the building, and she's helping us to get our financial house in the order. Okay, so we left off talking about something. I said in the order.
In the
Why
order.
y'all tell me?
Listen, I'm
In
just
the
letting
order.
it flow.
You know, it's morning. We thank you all so much. We like to laugh around here, so we make our little flubs, but we get through them together. So we left off talking about different things that let us know that a debt has gone bad, and we talked about death just before the break, or the demise of individually liable debtors. But let's talk a little bit about client disputes. Joy, what about client disputes?
Client disputes, man. When a debtor disputes the quality or the quantity of the products delivered, such misunderstandings can delay the debtor's remittance. So, in other words, if the dispute ends up in a court, then you will have to wait longer for the debt to be settled, meaning you're not going to get your money. Okay. You will have to designate the receivable as a bad debt because it can only be cleared after sorting out the dispute with your debtor. Yeah. So, again, you're not going to get your money. Not right away, at least.
Right
and, know, especially when taking things to court, these things can take forever.
Right.
So, we have to take that aside to be very clear about, what a bad debt is. I mean, you really have to understand that because, again, you're not going to get your money. And, we don't want you all to incorrectly write off a bad debt. And, of course, use your tax preparer accountant as your main source of information because I am not a certified public accountant.
Yes. Disclaimer.
But, Sinitra, get us back on track. What's the next step to getting your financial records together? And, tell us about that.
Well, and keeping in mind that when you do write off bad debt, it does show up on your income statements, your P&Ls, and all of that. And so if you're in a lending year with your financial institution, we're going to want to know what that bad debt is exactly. So it's just really, really important to make sure that you have those records in order and you know exactly what that is. Because just writing off bad debt for us, I mean, that's not going to be enough. We need to know what exactly that is. But, and then keeping in mind that cash is king. So every income and expense that goes through your accounts have to be accounted for. That is a must. Your bank account is a key source of documentation for everything that happens in your business. And that's why it's so important to make sure that you keep your personal and your business separate. I have a lot of customers that will use their personal credit cards for business and business credit card for personal. Is very, very important for this reason that you are able to keep it separate. I also have customers that have multiple checking accounts. One where they have all of the merchant services deposits going into, one for just payroll, one for just account receivables. There's whatever it takes for you to stay organized, and be able to keep that. Some people really don't need all of that.
Right.
But then you have people like myself that it's just easier for me to keep everything separate. And it just makes it easier bookkeeping for you. And so you want to make sure that that's all reconciled every month and that you have a good bookkeeping system for that. And so, unless you file quarterly, which if you're paying somebody to do it, let them do it. So, yeah. But you should have a updated list of all of your invoices that are still unpaid. Follow up on all of that and make sure everything that's past due is being paid. And this will help the cash flow forecast. So whenever you get ready to start your for new year and trying to set your goals and doing all of that, getting your financials in order, that's important in regards to the cash flow statement.
Right. Yeah. So tell us a little bit about the statements for the year then. How does that work?
So your balance sheet, your income statement, cash flow statement, these are all things that you can really do on your own. QuickBooks is a great resource for that. Yes, I love QuickBooks as well.
Saves
it's so
my
easy. It really does. It saves your life. So, but basically the balance sheet is a summary of all of your financial situation. So all of the cash on hand, all that, all of your liabilities, your assets, the equity position, the liquidity in your business and all of that good stuff. The income statement assesses the profitability of the business during the financial year. It compares the business revenues to expenses, and the results are either a profit or a loss. The cash flow statement shows the inflows and outflows of cash in your business. The cash flow statement is generally prepared under different subheadings. So you have your operating expenses, you have your investing activities, your financial activities. So it can be in different subheadings.
Right.
Does that make any sense? Okay. Want to make sure that makes sense.
Yes. I'm following. I'm
Yeah.
like, yes,
Okay,
yes.
yes. We're
Got
getting our
all
whole lives
these
together
notes.
right now.
And the
Yeah.
cash flow statement is really, really one of the most important elements for business investors and lenders for us to analyze. That's how we figure out where your money is, where is it going, do you have the liquidity? Because even if you're trying to get a loan, we want to make sure you still have money. We really don't want to lend money to anybody that's completely broke.
Right.
So can you cover this?
That's a problem.
That's a problem. So that cash flow statement is completely, is very, very important and instrumental in making sure that we are giving you the right projections to see if you can actually afford a loan.
Right.
And then I take that and see how much of a loan you can afford. So I'll take that and literally put it into my calculations and see how much can you afford to borrow.
Right. So you mentioned, using QuickBooks, but when should you really employ the help of someone else?
Yes.
Because we may think we can do it on our own and plug in these numbers into these different statements, but and run the reports, that QuickBooks does. But when should we really employ the help of someone else?
The short answer and the easy answer to that is you'll know when you know. Because
Right. When
after
these
a
numbers
while,
not
yes,
adding up.
exactly. And not only that, you no longer have the time for
Right.
it. And your business has grown so much, or you've become so busy, or now it's time for you to focus on another part of the business. It's time to grow the business and the branding and advertising and marketing. And so someone else should be doing that other part for you. So you
Right.
can kind of let your hands,
Because I know sometimes too, banks want a statement prepared by an accountant, not by you. So just
Well,
wondering about
even
that
if
too.
it's prepared by you, it can just be audited by
By an accountant.
by an accountant or bookkeeper. And
Okay.
so we'll take an audited
Right.
statement as well.
Okay.
Yeah. So there were several different pieces that you kind of talked about in those subheadings: cash flow from operating activities, cash flow from investing activities, and cash flow from financial activities. Now, my question is, what are some common ways that you see businesses increase their cash flow, especially in regards to investing activities? Tell our audience a little bit more about that.
Well, that really, I see them increase their cash flow usually by simply doing things like not outsourcing so much. You know what I mean? And if there's certain things that you can do in-house, I would say do that for sure. Like you have your accountant doing your payroll. Well, that can get very expensive after a while.
Right.
And so you have banks that have amazing software to be able to do that on your own. And that may cost you no more than $20 a month if you have under 20 employees, that kind of thing. And that will bring down, some of the costs that you're, spewing out. Just it's certain ways. Just the merchant services, even if you set up merchant services 2-3 years ago, chances are your interest rate is too high because no one has gone back in to review it. The bank is not going to take a position to go and give take less money from you.
Exactly.
You have to actually call and say, I want to review my merchant rate and make sure that you're in a good position. That's another way to bring down costs and all that good stuff. And so, there's just a way to kind of increase the cash flow there. As well, stop paying cash for everything. Cash is king. And so if you are in a position where you're needing new equipment, if you need to actually expand, grow, you're getting ready to do some marketing, onboard some more employees, you really want to make sure you get a line of credit or a loan for these things.
Okay.
So you can leave the cash on your balance sheet. It's really important. Again, cash is king. And I come across a lot of business owners that say, I don't need a loan. We have the money. Well, that's just not smart business.
Right.
You want to leave it on your balance sheet.
Exactly.
Borrow the money from the bank. They have enough.
Right.
They have enough.
Right. That's a great tip.
Yeah.
That's a great tip. So we are talking about how to get your financial house in order. And I guess we're going to still continue talking.
Continue
We lost
until-
our
Well, let's
producer.
just keep it going.
we lost our producer.
Oh, there he is.
There he is.
We're getting ready to go to break. No, we don't. No.
No.
He said we can't go to break right now.
Okay,
It's
then.
too good.
All right.
Let's just
This
keep it
is
going.
too good. Just keep going. So let's talk about, some more about what you need to do as far as getting results, with your finances.
Well, I always say it's best to take a look at your last year and evaluate with what you have currently done and just make sure that you have all the goals you've set for yourself
Right.
and everything that you were trying to do, that you were able to do it. And if not, figure out where your weak links are, where where the issues are. And so it's best to always evaluate from the previous year with the year that you're in to make sure that you're growing in the right direction.
Okay. So looking at, your sales, your profit, previous costs, things like that.
Absolutely.
Okay.
Absolutely.
Okay. Great.
Yeah. So we talked about the comparison. Can you give us a little bit more detail about how you compare what happened last year to what's happening this year, or what has happened, and some of the look-fors as you're going through your statement?
So you want to compare your actual results to the annual budget that's set and that's under review. And of course you assume that you had a prepared business budget for the year. Not every business actually has a budget. Like not every household has a budget.
Right.
It's no different. If you if you don't have a household budget, you probably really don't have a business budget. So that's really important. And if you didn't do that last year, make sure you do that this year. Set a budget for your business. That is a great control tool to make sure that cash flow and spending won't get out of hand. And then you're going to compare the actual results to the prior year, that will show any kind of decline or growth in the business. And it results in numbers from sales, profit, costs. And you compare the results of the industry average to your competitor. And that information is always available to you. It's simple Google to see what else everyone else is doing.
Right.
And you want to make sure you're trending in the right direction.
Yeah, and that's so important, though, because a lot of us work in a silo, especially within small businesses, and we're so focused on what it is that we're doing that we forget that there are other people out there that are doing things similar to us.
Exactly.
And we have to stay on target, not just for financial reasons, but just to stay relevant in your industry. You
Right.
You know what else is going on. So that's a very important point that you bring up. I love that.
So what if after reviewing your budget, you discover that you fell well below your target growth? Talk to us about whether it's a good time to start considering whether you need to approach your bank for a loan.
Again, if you are cash broke, it is not a good time to approach your bank for a loan. You want to make sure, again, I always say this all the time, cash is king. I think I'm just going to get a t-shirt.
Right. Cash is king, that's
king.
it.
And so, but it is a good time to approach your bank for a loan if you have a new contract. That I have a lot of clients right now that have just been granted grants from the city or contracts from the city, new contracts. They have acquired new businesses, things like that. And so this is a good time to sit down and review with your financial advisor, your tax planner, and your banker.
Right.
To say, okay, should I get a loan? And so, and again, I take that information that you have with your cash flow statement, your income statement, balance statement, P&L, and I see if you can qualify and how much you'll qualify for.
Okay.
That's good. So what about lines of credit? Would that be a smart alternative for when your cash flow is wavering?
Yes, it absolutely is.
Okay.
And so you have to keep in mind what lines of credit, what they're used for. And you won't get a line of credit to go and purchase hard assets. The line of credit is to cover whenever you do have account receivables. And you do have net 30, net 60, net 90, and you're waiting for these invoices to be paid. You have that cash flow gap for those, that time period. That line of credit is great for that. You pull it over, cover your expenses. Once your invoices are paid, you just pay the line of credit back.
Right.
So.
Okay. All right.
Okay. And, speaking of, you have all these different options for obviously managing your finances. But, last year we talked about goal setting. So how do you apply goal setting to your finances?
I always tell my clients to use the SMART goal setting acronym, which is specific, measurable, achievable, relevant, and timely.
Yes.
And so that is really, really important to make sure that when you're setting your goals, that you are specific and clear about what it is you want to achieve. And
well, let's talk about that real quick. So when you are specific, can you provide some examples about specific financial goals?
Absolutely.
Yes.
Absolutely. So are you looking to have increased revenue, which you always are, no matter who you are. You always want to make sure you have that. Decrease costs, improve margins, debt service management, cash flow planning, and what are the growth plans for the business. So, and I actually came across a couple of business owners this past week that said, I can't grow anymore right now. it's too much. I
Capacity
can't.
issues
Capacity,
or-
it just, I cannot. So again, setting the goal, you're being smart, you're being specific. So now I need to maintain what I have for this year and then prepare myself for growth for next year.
Right.
Because they just cannot handle the capacity of growth right now.
Right.
That's good. Well, that's a good problem to have.
That is a great
Yes,
problem.
exactly. Like
It's almost like having to
I just can't. I'm busting at the seams.
Yeah, exactly. I can't take on any more clients.
Right.
That's a great problem to
Right.
have. It's
Yeah.
almost like I can't wear these pants anymore.
Right.
They're too big.
Right.
That's a great problem to have. Like, yes. Yeah. So you want to make sure that you definitely you do that, and you're very, very specific with that, and then you make sure that your goals can be measured. That is very, very important, and that you can recognize that you achieved your goal.
Yes. And we are going to talk more about these SMART goals when we come back with Miss Tenitra Hurd, VP of First Citizens Bank. Call us at 832-230-5592.
Pro Floors, we stock a huge selection of carpet. You can buy it today, and you can get it today. With over 20 years experience, we do it all. Carpet, laminates, tiles, and hardwoods. We carry popular name brands. We have the largest selection at unbeatable prices. We specialize in residential apartment and commercial installs. Plus, when you get it today, you can have it installed tomorrow. Get the best floors for less and get it today. Hill Pro Floors on Greenbrier in Stratford. Pro Floors, we stock a huge selection of carpet. You can buy it today, and you can get it today. With over 20 years experience, we do it all. Carpet, laminates, tiles, and hardwoods. We carry popular name brands. We have the largest selection at unbeatable prices. We specialize in residential apartment and commercial installs. Plus, when you get it today, you can have it installed tomorrow. Get the best floors for less and get it today. Hill Pro Floors on Greenbrier in Stratford. Pro Floors, we stock a huge selection of carpet. You can buy it today, and you can get it today. With over 20 years experience, we do it all. Carpet, laminates, tiles, and hardwoods. We carry popular name brands. We have the largest selection at unbeatable prices. We specialize in residential apartment and commercial installs. Plus, when you get it today, you can have it installed tomorrow. Get the best floors for less and get it today. Hill Pro Floors on Greenbrier in Stratford.
And we are back. Thank you for joining us this morning. We appreciate you joining us for the Business Breakfast Talk Show. We have a question from Satorian Barnes, and the question is, if I am starting a new small business, is it a good idea to hire an accountant right away or wait? And thank you for your question.
Yes, thank you, Satorian. And that is a very, very, very valid question. And my answer to that is really just kind of depending on the type of business you're starting, and if you have a lot of cash flow in the beginning, a lot of accounts receivables in the beginning. It just really, really kind of depends on the situation. So if we're talking about a medical practice or dental practice, something of that nature, yes, you should hire an accountant from the very start. If you're starting something else, maybe a clothing business or consulting, maybe not. You can really do a lot of that accounting and save that cost with QuickBooks. Mm-hmm. When I say QuickBooks is not paying me. I'm sorry. Maybe they should be.
We need to seek them out, though.
Yes. An accounting software like QuickBooks would be great to use to start to do your own accounting in the very beginning. And just making sure that you keep track of all of your monies yourself. And that's just something that right now, at the very beginning of the business, just, weighing the risk, weighing, is it the value of it? Right. Is it really worth it for you to pay someone to keep your books for you quarterly at this point, or can you do it yourself?
Yes, right. Absolutely. Great. Thank you for answering that. And so we're going to jump back into our SMART goals. We left off at M for measurable.
Yes.
So if you could pick back up on that.
Yes. So as I was saying, make sure that your the M in SMART is measurable. You want to make sure that your goals can be measured. And so that way you can recognize that you have achieved that goal. A way of doing that is the business plan. Very, very important to go back and, refer back to that business plan that you have set up for your business. That's part of the measurable. And make sure that it's achievable. Now, I am a walk by faith kind of person. But let's just make sure that what it is that you're setting out for your business to do, that it is actually achievable.
Right.
Look at your current cash situation, your current sometimes credit situation, your bad debt, what has not been paid. If you do have people that have died on you that owes you a lot of money, right now maybe it's not a good idea to go out and be very, very aggressive in trying to do, different things with the business. So make sure that whatever it is that you're doing, that it is achievable. Make sure that it is relevant to your business. I had a client that has a business that she has a janitorial supply, and she went and purchased a marketing company. I just did not understand why that was really relevant to what it was that she was trying to do initially. And so when I said, are you trying to now take over the marketing for the company? And well, no, I just thought it was a great investment. Well, who are you talking to? Who are your friends? And I'm all for investments, but again, is it relevant for your growth? So if this is something that you're taking possession of because you no longer want to outsource it, I can get that. Or if it's just part of the investment because you just have money like that.
But bought a whole market.
Yes, exactly. And so, is it relevant? So is it going to increase profit for your business? And so if it's going to increase, like I said, brand awareness, and you want to take over the marketing for your own company, I kind of understand it, but you just want to make sure that it's relevant. Also make sure that it's timely, that you set a realistic deadline for completing the goal.
Yes.
It has to be realistic. And so if you know it's something that is going to take you a couple of quarters to do, a couple of months to do, or maybe the full year to do, give yourself that time to do it. Make sure that it's something that you can actually do within the time frame that you have allowed it for the business.
I think that's one of the hardest things.
It is.
Right.
Because we only have so much time in a day. And then, being an entrepreneur, small business, it's also, setting those goals. How do you set those deadlines? Maybe you want to reach certain benchmarks by the end of the year or quarterly, So I think that's a hard one to do.
It is. And I always say make sure you give yourself a little cushion.
Yes, thank you.
It's important to do that because you don't want to stress yourself out, stress out your employees. Just want to make sure that you give yourself, if you know that it could take about 6 months, give yourself 9.
Right. Absolutely.
Just in case we have a hurricane
Right.
of
Right.
biblical
Exactly.
proportions.
Like,
You just never know. So,
Exactly. So speaking about employees, talk to us about the employee side of things. How do you include your staff in your financial goal setting?
well, if anyone knows the inner workings of the business, it's going to be your employees. They will be able to tell you what's working, what's not working, what we should where we can trim the fat,
Right.
what's not necessary to do anymore, or even sometimes we need someone else. And so basically getting them involved in it not only helps you be able to project a lot better, you know, your coming needs, but it also makes sure that they're invested in the business. They
Right.
know that their opinion really matters, and you know you're going to take that in consideration when growing the business.
Right.
so, okay, we talked about employees. We talked about setting SMART goals. We talked about all of that good stuff. Now for a few lightning round questions. if you will. What have you found to be the most challenging with customers and their finances?
The bookkeeping, the organization, just right now, it's one of those things that if you need a loan, every CPA in the city is completely busy and jam-packed because of all of the delay from the hurricane and taxes and all that good stuff. Trying to now get finances and get end-of-year statements and all that good stuff has been really, really hard. And so, and then right now, of course, unfortunately, because of the hurricane, a lot of my clients waiting on the FEMA money or the SBAs or grants or whatnot. They have paid for these repairs out of their own monies in the bank, out of their working capital.
Right.
And so now the balance statement is very, very low. When in historicals, they were not having that issue, but now they're waiting for the money to come back. And again, we have to go by the balance statement. So if the money's not there, we can't lend.
Right.
Yeah.
Right. Absolutely. Satorian actually had another question.
Okay, Satorian,
Fire
go
off,
for it.
Satorian.
Yes.
What is a realistic percentage of the business profits that should be reinvested?
Ooh, that's a good question.
Ooh, that is really, really a good question. And again, that is definitely a one-off depending on the type of business you have. Do you have really low overhead? You know, or, you know, is it something that you are working from home and you have, you know, you don't have to worry about rent and, you know, employees or, you know, just really kind of depending. So if you have a really, really low overhead, that percentage should be something that you should come up with your CPA or your tax advisor. I couldn't give you that number specifically, but you can be a lot more aggressive if the overhead is a lot lower. But if you have a high overhead, you want to make sure that you're not as aggressive.
Right. Okay.
Yeah, and I think for it's as far as speaking for my business, you know, doing consulting, it's really low overhead to kind of start out.
Exactly.
Yeah, so you're able to invest more, but now you're saying the cash piece is so important that you want to keep more of that on hand because I always talk about bootstrapping
Exactly.
and doing everything for myself. But definitely, as we're having these conversations, I'm considering alternatives because I
Right.
want to keep my
Cash
on
in your
hand.
It's very
These
important.
coins
Yes,
in my
in my
Keep your
pocket.
coins in your pockets. Yes, absolutely. And it's very important, not just from a lending aspect, but as well building the business credit. So
Yeah,
you want to make
absolutely.
sure that you finance as much as you can, even if you're going to pay it off, as long as there's no prepayment penalties for
Right.
whatever you've gotten. So
Right.
if you have a truck that you need to purchase for the business or equipment for the business, you want to make sure that you get
Right.
a loan for that. I mean,
Absolutely.
that there are tax benefits
Right.
to doing that.
I think some people too have a stigma. You know, they think that debt is bad. You know, like
It
I don't
is
want
not.
any loans. I'm debt free. You know,
that
but
is such an un-American thing to say.
Exactly.
Debt is the American way. Yes. So yeah, it is. So no, debt is not bad at all. And so I mean, if you're in a position where you know, obviously you have millions and millions in the bank, and you're in a great position, and you have a small acquisition or a small piece of equipment, I can understand not wanting to reach out to your banker to say, "Let me send you over all of my financials to get this $100,000 loan." I can understand that.
Right.
But if you are a small businessman, you definitely don't want to take out $30,000 to go purchase a truck when we can go ahead and finance that for
Exactly.
you. And of course, there are tax benefits to that.
Right.
Yes.
Okay,
Great.
that makes sense. Well, I think it's time for a break. We have one more break coming up. And when we come back, we're going to continue with our questions with Ms. Sinitra Hurd. Go ahead and remember to type your questions in the comments if you're watching us on Facebook Live, or you can call in 832-230-5592. We'll be right back.
Pro Floors, we stock a huge selection of carpet. You can buy it today, and you can get it today. With over 20 years experience, we do it all. Carpet, laminates, tiles, and hardwoods. We carry popular name brands. We have the largest selection at unbeatable prices. We specialize in residential apartment and commercial installs. Plus, when you get it today, you can have it installed tomorrow. Get the best floors for less and get it today. Hill Pro Floors on Greenbrier in Stratford. Pro Floors, we stock a huge selection of carpet. You can buy it today, and you can get it today. With over 20 years experience, we do it all. Carpet, laminates, tiles, and hardwoods. We carry popular name brands. We have the largest selection at unbeatable prices. We specialize in residential apartment and commercial installs. Plus, when you get it today, you can have it installed tomorrow. Get the best floors for less and get it today. Hill Pro Floors on Greenbrier in Stratford.
Morning, and we are back. If you are just joining us, you know that this is the Business Breakfast Talk Show, and we are serving up some good stuff today. We are here in the studio with Sinitra Hurd, and she is our expert of the day, helping us to get our financial house in order. And we've been asking her some questions. And Sinitra, we want to pick up where we left off. And I want to ask, what are some of the best tools that entrepreneurs can use to keep their finances clear and in one space? We talked about QuickBooks. Do you have any other options that might be available for our listeners?
Yes. So obviously accounting software. Also, I mentioned before, keeping your accounts separate, having multiple checking accounts. That's a great way of keeping it clear and in order. Keeping the separation of business and personal. And also making sure that you have, there's so much available to us now in regards to apps and things of that nature where you can just take pictures of your receipts and things. Whatever it takes for you to just stay organized is what's important. And so I can't tell you, still today in 2018, people will go to their CPA office with shoeboxes full of receipts. You know, I mean, it's really, honestly.
The nonsense.
The nonsense, yeah. And I'm like, why is this not on credit card statements?
This is 2018.
This is 2018, exactly. Or you scan these in and keep them filed on your computer on a drive or something like that.
Absolutely.
And so just keeping it all in one place. And, you know, paper can be destroyed. Anything can happen. I have clients who are literally dealing with a lot of issues because they had everything on paper, and it was flooded.
Yes.
All of the receipts are gone now. And so, you definitely want to make sure that you take advantage of the technology that we do have now, and download some of the apps that are able to, keep your receipts and some of the accounting software. So that's a great way to do it.
Right.
Okay, what about common mistakes? We talked about budgeting, and some people are better at budgeting than others. So what are some good tips and tricks about creating and adhering to the budget? Because we can put it on paper, and it's a struggle bus for a lot of us.
It is.
Right.
It's like, no, but I want that.
Right. Exactly. Write this in.
Exactly.
Right here.
Yeah, I'm going to go and create another line item in my budget because I need that right there.
Yeah.
So tell us some of the mistakes when you create and try to adhere to a budget, and how we can alleviate some of those faux pas.
I mean, that's a great place to start your new year off right. Keeping your financial house in order is just trying to make sure that you avoid the common mistakes, which are you're not adhering to the budget.
Yeah.
That's the number one common mistake right there. And just making sure that you don't just write it down because it looks good on paper, but you actually adhere to it. That this is my payroll budget. This is my, you want to make sure that you keep a clear, concise record of what the budget is, and where the money is going. And so, again, back to the business plan. It's very important that you make sure that those funds are allocated where they're supposed to go. As well, savings accounts. There are business savings accounts, people. Use them. Everything has them.
Exactly.
So that way, if you do run into an issue with a company, because things happen, that you can actually now pull from the savings and not from somewhere else it was allocated to go. And making sure that you are using the SMART acronym when you're creating it, making sure that it is, specific and it is measurable. And, you want to make sure that you are really, really specific where it's going, how it's going to be allocated, and again, using a savings account.
Okay, so I used to have issues with budgeting.
But the Lord called you the
The Lord.
You've been delivered.
I've been delivered. But you know what? I think when you say that, one of the main things that comes into mind is just discipline.
Yes,
especially
absolutely.
for people who are running every single aspect of the business by
Absolutely.
themselves right now. So if you're a beginner or you're a startup, please heed this advice that we're telling you guys. You have to have discipline, and some things you have to sacrifice.
You absolutely do.
And I'm thinking about that just in terms of wanting a business that's going to eventually grow in nature. You can't buy that shirt,
Right.
And
You just can't do
You
it.
cannot. You
I mean,
need to
is it really worth
Yeah.
buying a new truck right now, or can
Yeah.
you really go ahead and just spend the $3,000 and get it repaired? And I
Right.
know, is it going to be a long-term issue?
Right.
But is it really smart buying a brand new equipment truck right now, or a brand new piece of equipment, or should you repair this one? Just adhering to the budget.
Right.
And even if someone says, I'm going to give you a great deal and give you 15% off,
Exactly.
that just may not be what's best for your business
Right.
at that time. Just adhering. Again, the discipline is so important.
Right.
Yeah.
It really is.
Absolutely. So, any final thoughts about this whole segment that we've done today, getting your financial house in order? What are some key pieces that people need to leave with today? We talked about SMART goals. We talked about balancing your budget. We talked about cash being king. Like, if they don't take anything else away today, what is the number one? What's the number one?
The number one for this understanding is staying organized is what's going to truly carry you in your business financially. You have to be organized. I can assure you that if you're not organized, it is a disaster waiting to happen. And again, back to Satorian's question, when should you employ a bookkeeper or CPA? If you know that this is not your strong suit,
Yes.
if you know that you're not organized, then maybe this is something you should work in your budget.
Right.
And getting someone to do the bookkeeping for you. And your banker should be a great resource for you to send you over a couple of leads for good bookkeepers. I mean, I know that I'm that type of banker. I can't speak of anybody else. But, your banker should be a great resource for you to say, listen, if you need bookkeeping, this firm will be great for your type of business. If you need a great CPA, this will be a great, or even the accounting software. Some of the banks come with accounting software built in online banking.
Right.
It comes with budgeting in the online banking. You know what I mean? So the organization is really, really a important part of making sure that you have your financial house in order in regards to your business and the discipline.
I think that's great. I mean, a lot of people struggle with that, and people need to be honest with their strengths and weaknesses.
Yes, absolutely. And sometimes it's great to have an accountability partner.
Right, absolutely. Because that will have long-term effects. You know, you're going to be out of a lot of money if you don't take the right precautions ahead of time.
Yeah, so Sinitra, how can people contact you? You've given us a wealth of knowledge and information, but if people want to take it a step further and say, you know what, I need to have a consultation with Sinitra,
Absolutely.
I need to reach out to her directly, where can they find you?
My direct number is my mobile. You can text me or you can call me, 713-657-5463. My email address is my first name, Sinitra, SANITRA .Hurd, HURD, @firstcitizens.com.
Yes.
And you can send me an email that way as well. And so I office in the Galleria area, but I'm a mobile banker. I go all over the city, so if I have to come to your office, I can do that as well.
Great.
That's awesome. So you've heard it right here on the Business Breakfast Talk Show. Our expert guest today, Ms. Sinitra Hurd, Vice President of First Citizens Bank. So thank you so much
Thank
for
you
being
guys for
here
having me
today.
again. Yes, I love it. I love coming.
Great.
I hope people were taking notes.
I hope so too. Yes, I hope so too. There will be a pop quiz.
Yes. So, until next week, we want to thank you all for being here and joining us today. We will see you next week at 8 a.m.
Yes.
Breakfast is served.